So we will start with the accounting basic section today. So first of all, we will start with the meaning of accounting. What is accounting? What are the steps involved in accounting? All this process we will discuss today. So as we know, accounting is the art of recording, classifying, summarizing and interpreting the financial transactions and communicating the result to the users. So there are some keywords here. Accounting is an art of recording, classifying, summarizing, interpreting the financial transactions and communicating the result to the users, right? So we can classify the accounting with these subheadings, right? So these are the steps involved in the accounting process. So first of all, the accounting will be identifying the financial transactions and events, then record the transaction, classify the transaction, summarize the transaction and interpret it and communicate it. So these are the basic process of the accounting. So I will start with the identification, right? So what is identifying the transaction? Identifying the transaction simply means whether the business or the bookkeeper will identify it is a monetary or a non-monetary transaction. So here you have to careful about the thing is only the monetary transaction will be considered for the accounting process. So non-monetary transaction will not be recorded in the business. So what is monetary transaction? That is the second question from this, right? So identifying simply means accounting record only the transactions and events which can be measured in monetary terms, right? So this involve identify the transactions and events that are the part of economic activity. For example, we can take some monetary transaction like sold goods for cash $5,000, right? So here we can understand that this is a monetary transaction. Some money is involved in that, right? So what is non-monetary transaction? Non-monetary transaction which includes the skill of the employee, then hard work of the employer, etc. will not be considered, right? So if there is any monetary aspect, that will be considered for recording the transaction. So only the monetary transaction will be considered, that is called as identifying, right? Whether it is a monetary or non-monetary transaction. That is the first process of accounting. So the next process is recording the transaction. So recording simply means we know that accounting is an art of recording the business transaction in the books of account, right? So recording is the process of recording the business transactions of their financial character. It should be, as I said, it should be financial character that will be recorded in the books called journal, right? That book is called as journal. So first we will identify the transaction whether it is monetary or non-monetary. Then the monetary transaction which is measured in terms of money, okay, that will be recorded in the book of original entry called as journal, right? That is called as recording the transaction. Third process is this one is classifying the transaction. So here classifying this is also process of grouping the transaction or entries, right? For one nature at one place, or we will group together which will be coming under common heads. For example, expenses or assets, liabilities, etc., right? So which have a common features. So the transaction which is recorded in the journal or the subsidiary book, we can say subsidiary books, are classified and processed in the main books called ledger. So first, as I said, we will record in the journal. From the journal, we will classify into a special book is called as ledger, right? So this book has individual accounting heads under which financial transaction related to the accounts are posted. So it is from the journal we will transfer to the ledger accounts. That is called a transferring or posting to the ledgers, right? So only the monetary transactions which are related to the business will be recorded in the journal. From the journal we will post to the ledgers. So after classifying and we are posting to the ledgers, we will summarize the transaction, right? So summarizing means here, as we know, we will record all these transaction and we will post all the transaction. So for at the last, we need a summarized all the events and transaction. Then only we will know how much is the total sales, how much is the total purchases, etc. So this involves the presenting the classified data in a manner which is understandable or useful for the internal or external users. If we have so many data related to the sales, purchases, then we have to classify, right, which is cash, which is credit, which is monetary, which is non-monetary. So here in the summarized form means how much is the total sales, how much is the total purchases, etc. will be there. So this will be very useful for the external or the internal users, right? So we can easily understand how much is our sales, how much is our total profit, how much is our total purchases, expenses, liabilities, etc. So this is very useful for the users of the business. So this process leads to the preparation of the trial balances, like financial statements, etc. So summarized form will be in like trial balances, financial statement, which we will discuss later in the chapter. So after summarizing, the next process is interpreting, right? So interpreting simply means analysis and interpretation of the financial statements or of the financial data, right, which are carried out that the users of the financial data can make a meaningful judgment of the profitability or the financial position of the business. That is called as interpreting. So from the summarized form, we can interpret the results, right? We can make a meaningful judgment, right? That is called as interpreting. Then last process is called as communicating. So finally, the accounting functions involved communicating the financial information, that is financial statement, to the users, right? So the accounting information should be provided in the time to the users so that can appreciate the decision may be taken on an appropriate time, right? At an appropriate time. So communicating, it may be for internal users, for the external users, right? Internal users means within the organization. External mean outside of the organization, like banks, the shareholders, etc. Right? So they can decide whether they should invest in this particular company or they should give loans to this particular company or not. So this is communication. So financial statement which is giving a decision, right? It will be helpful for making decisions. So through that you can easily understand how much is the profit involved, how much they made the loss, how much is their liabilities, etc. So this all called as accounting process. So here we can understand easily the identifying, recording and classifying. So first, these three steps are called as bookkeeping. Bookkeeping, right? All this together is called as accounting process. Accounting. So bookkeeping involved identifying, recording and classifying the transactions, right? The accounting involved all these process: identifying, recording, classifying, summarizing, interpreting, communicating, etc. So this is the difference between bookkeeping and accounting. So we'll go through the difference between this bookkeeping and accounting. So this identifying, recording, classifying is known as bookkeeping. All together are called as accounting, as I said. So we'll go through the somewhat deep level of bookkeeping and accounting. So here it is a classification of bookkeeping and accounting. What is the difference between bookkeeping and accounting? So as we know, it is the process of identifying the financial transaction events and recording and classifying, right? First three process: identifying, recording and classifying. These three processes are called as bookkeeping. So what is accounting? It is a process of summarizing the recorded transaction and interpreting and communicating to the users all together, right? So where the bookkeeping ends, there the accounting process will start, right? So second difference is it is the primary stage. Bookkeeping means it is a primary stage of accounting, but accounting, it is the secondary stage. Whenever the bookkeeping ends, the accounting process will start. And the main objective of the bookkeeping is to maintain a systematic record. Everything should be in a systematic way, right? In accounting, everything should be in a systematic way. So that is the main objectives of bookkeeping. But here for the accounting, the main objective is to ascertain the result and communicating to the users. So that is the difference of bookkeeping and accounting. Here is this is to maintain, bookkeeping is to maintain a systematic record, but the accounting process is to ascertain this results and communicating to the users. That is the key difference between bookkeeping and accounting here. Then we can say bookkeeping is a routine job. Day to day, whatever we are getting, whatever the transactions are coming, that we are recording in our books, right? That is a routine job. We don't need any specialized skills or any skills or knowledge here. It's not performed by the skilled staff. Anyone can perform, right? We can identify and we can record easily. But here accounting is not a simple job, right? Here we need a specialized skills or knowledge. So these are the main difference between bookkeeping and accounting. So the accounting process will be doing by the skilled professionals, right? So bookkeeping can do by the through a non-trained staff or anyone. But here accounting, it should be a trained staff. He should have a very good concept about the accounting, the results and all. So these are the main introductory part of accounting, right? I hope you understood this.